What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a strong open but gave it all back and closed red for the day, but we are still above critical support. Was this just a bear trap round number 2? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.83%, but intraday we did test that resistance right around 389 to 390. And that is going to be a very strong resistance the bears do want to protect, because if the bulls break above that level, they will have the bull trend of the higher low and the higher high. So it should be no surprise bears are stepping in at this resistance, but the question is this all going to be a bear trap and the bulls will blast through that resistance? And the first sign of evidence that this may be a bear trap is look down here at the volume. Today was lower volume than the previous 3 days of buying because we did see a lot of buyers of the dip around SPY 370 and just above 380. So keep in mind bears need the elevator down because they cannot go down on low volume. Bears will require this high volume selling that we've seen during these large red days to break down through this support, and we have gone absolutely nowhere for 2 months. So there is a ton of support the bulls are going to use around this zone. So for that reason, I would not be bearish on SPY while it is closing above a positively sloping 20 simple moving average, and more so than that while it is closing above 380. SPY below 380 is a completely different story, so there's nothing emotional about following price action. If SPY breaks down below 380, you instantly need to become more bearish. However, while SPY is above 380, we are still in this sideways trading range between 380 and 390, and there is nothing bearish or bullish about a trading range. What is going to be bearish will be the breakdown below 380 or the bullish breakout above 390. So you can see it's a very tight wedge and it's consolidating to the very tip of the point. So there's only a little bit of time left before the decision is coming for SPY on which direction it's going to break out. And we already know the triple Qs broke out to the bullish direction because the tech sector is leading the way higher. So on SPY, you're getting a lot more bearish below 380. And if we break 380, that strong support at 370 is going to be the next leg lower. And below 370, we are very likely going to 350. Above 390, look for the gap close at 401, and if we continue through that gap, we will see the short squeeze that could take SPY all the way back up to 418. So just watch that risk level at SPY 380 and do pay attention that there is a lot more evidence that the bear trend is weakening with all of this sideways price action and a lot more buyers of the dip around SPY 370. So you need to be very cautious if you are getting overly bearish while SPY is above 380. On the NASDAQ 100 triple Qs, you can also see we went down on very low volume today, and we did see that test of resistance just above 296. And I continue to tell you that is where the bears are waiting, and the bears do want to protect that level. Just keep it in mind that this is a bear market and bears do not want to give this market away to the bulls, or at least not without some type of significant battle at that resistance. So keep in mind the triple Qs are also in a trading range between 287 and 296, and the critical support for the bulls is at 287, which is also going to be that 20 simple moving average. If the bulls lose this support, it is going to look extremely bearish because we're going to be losing the slight uptrend in the short term of higher lows. We will not have any confirmation of the higher high breakout, which means this will look like some type of triple top if we do break down below about 287 to 284. That means we're very likely going for that next leg lower at 258. So this is extremely critical support for the bulls, but so far the bulls are holding this level and they are doing everything they need to do to build the bull trend. So as long as the triple Qs are above 287, there is still the possibility they're just building up energy to go battle the bear right around 297. And if we do get the bull breakout, look for the gap close at 299 and then testing the previous high right around 315. So for that reason, you can get a lot more bullish on the breakout above 297 and you can get a lot more bearish on the breakdown below 287. It's going to be a trading range until we get that breakout, but if you zoom out, the triple Qs have already broken out of their consolidation wedge and have already back tested that breakout as support and saw the successful bounce. So the tech sector is leading the way higher. There's only one more step of confirmation in the price action, and that is going to be the break above 297. In the Dow Jones, we were down 0.64%, and intraday the Dow Jones was trying to break out above that resistance right around 314, but got rejected below that negatively sloping 50 EMA and closed right back down on top of that critical support right around 310 to 311. As you can tell, all of the indices are closing above positively sloping 20 simple moving averages and are very close to breakout looks. So the bulls just need to push a little bit harder off of this support to get the confirmation of the breakout. Above 314, the Dow Jones needs to break above that 50 EMA, which is at 317. And then we do have the gap to fill at 323. And above that gap, we're retesting the previous high at 333. This critical support zone right around 309 on the Dow Jones will be the critical support, because if we break below that, we're very likely going to fill the gap to the downside right around 307 or retest the low right around 297. So watch these breakout zones for the bears and the bulls, because these consolidation wedges cannot last much longer. As you can clearly see, we are getting to the end of this consolidation. In the Russell 2000 IWM ETF, we were down 0.28%, and again we closed above a positively sloping 20 simple moving average after being rejected from that resistance around 175. The bull breakout will be above 178, and then we'll very likely go close the gap at 183.5. And the bear breakdown will be down here below about 170 for a retested low at 164, and then the next leg low at 156. So as you can tell, we're still consolidating, still wedging on a lot of these ETFs, and IWM has a lot more room in the wedge that could take us out to month end of going absolutely nowhere. So keep in mind, it's still a trading range between 170 and 175 until we get the breakout. On the ARKK ETF, we were down 0.32%, and we are still wedging in with a flat top and a rising base. So we're definitely getting more consolidation, and we did get rejected below the 50 EMA at that resistance at 45. ARKK is either a bullish breakout above 47 or a bearish breakdown below 42. So continue to wait for the breakout, otherwise trade the range in between the support and resistance. On the VIX, we were up over 4.5% today, as the VIX is bouncing off of that support right around 24, but you can see the VIX did develop a bear trend as of today, and the price action is below all the moving averages. So as you know, the VIX is inversely related to the S&P 500, so if the VIX is heading into a bear trend, it is very likely the S&P 500 is heading into a bull trend. Confirmation will be the breakdown below 24, so if you want to wait for the VIX to break below 24 to get more bullish, that will be your confirmation. If we continue to see a spike off support and we see the VIX spiking back above 30, then we're very likely getting a continuation of the bear market in that next leg lower. But you can't ignore the fact that the VIX has been getting crushed and now has a bear trend, so you do want to get a lot more bullish when that VIX breaks down below 24. On Bitcoin, we're currently up 3.6% as Bitcoin is trying to break out above that resistance just below 22,000, but so far we are seeing selling pressure above that resistance. And it does look like we're very close to breaking above the resistance trend line. So there's going to be a lot of resistance between 21 and 22,000, but if we do get the bullish breakout, it does look like a triple bottom look, which could take Bitcoin all the way back up to 25 to 28,000. Or we're going to get rejected, get the triple top look, break down below support at 19,000, and then come down to the full measure move lower at 16,000 or the next price target at 12,000. It's still a trading range between 19,000 and 22,000 until we get a breakout in either direction. On NVIDIA stock, we were up 2.15%, and we did get a very high volume breakout on NVIDIA back over 161, and we did do it on a gap up and run open. So this is definitely bullish price action in NVIDIA. If the semiconductors have bottomed and they're getting ready to rally, that is going to be very bullish for the tech sector. So pay very close attention to NVIDIA stock. As long as it's above the breakout level at 157, you can stay bullish. And so far, this does look like a higher low, higher high on the daily chart. So the next critical breakout will be above 171. And then we will very likely run up there to close the gap just below 181. So the next bull breakout and resistance, which is also your price target, is at 171. And you want to stay a lot more bullish as long as we're above 157 and definitely while we're above 161. If we break back down below support at 157, look for a retest of the low at 150 or 145. And if we break the lows, look for the next leg lower at 130 to 125. On Tesla stock, we were up 0.2% as Tesla continues to close above $700, even though we are still in this consolidation wedge. You're either going to get a very bullish impulsive breakout above 745, or you're going to get a very bearish breakdown down here below 657, which will require the breakdown below that support at $700. Right now, it does look like the bulls are stronger because NVIDIA is on the top side of the wedge above $700, but that can change very quickly if Tesla breaks down below 700. So you do want to use $700 as your risk level in the short term, and you're getting very bullish on the breakout above 745 with upside price targets at 775, 798, and 828. If we break down below 700, look for a test of the low at 657, and below that, you're retesting the low at 620 or going for the next leg lower at 571. On Apple stock, we were down 2.06% as Apple did come up to the neckline at 150 and tried to break above that level, but did get rejected at the neckline. So it is possible this is going to end up being an inverse head and shoulders, which means we are getting the pullback from the neckline at 150 to build out the right shoulder before we go for the next leg higher, which will very likely take Apple to close the gap at 174. So pay attention to Apple, because as long as it's building out the right shoulder, this is a bullish pattern of higher highs and higher lows, and that will just require Apple to stay above support right around 140 to 142. Otherwise, you are looking for Apple in a more bullish scenario to hold support at the 50 EMA, which is currently at 146. So critical support for Apple will be 146 and 142, and if we lose that support at 142, we're very likely coming back down to retest the low at 137. On a bull breakout and close above 150, the next critical resistance will be just above at 156.5. On the financial sector, we were down 0.38%, closing back over a positively sloping 20 simple moving average, and we do have gaps to the downside and the upside, so there's no telling which gap will fill first, so use that risk level right around 31.6. On the industrials, we were down 0.6% with the price action back below all the moving averages and regaining the bear trend. And just like the financials, we have gaps to fill to the upside and the downside, and we're stuck in a consolidation between support and resistance. The healthcare sector was down 2.1% today, coming back down to the support breakout, which is right around 127. And so far, we do see the price action starting to weaken, closing below that 20 simple moving average. So if the bulls in the healthcare sector are out there, we should see a bounce from this support. Otherwise, continue to expect more downside in the healthcare sector. The energy sector was up 2.29% with a gap up open, and we did close back over the 5 EMA, but so far we still have the bear trend, and we need to get all the way back over the 20 simple moving average and the 50 EMA to reverse the bear trend. So jumping back over to the S&P 500, pay attention to the very low volume selling, as we are still above critical support, and I do not want you to get bear trapped, because as long as we're above support, it is still possible the bulls are building a trend. If the bulls lose support, it's a whole different story, and we need to get ready for that next leg lower, because overall this is still a bear market until the bulls get that bullish breakout above 390. Remember, when you follow price action, the market does not care about your opinion or your views on where you want the market to go. You need to be prepared for the next leg lower if we break down below 380, or the next leg higher if we break out above 390. If your trade plan depends on the market only moving in one direction, you will never be a profitable trader. So know both of these scenarios and make sure your trade plan knows exactly what you're going to do, no matter if we get the bull breakout above 390 or the bear breakdown below 380. Do not depend on only one or the other happening. Make sure you know exactly what you're doing in either scenario, and always use proper risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord, where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.